Mungu twaomba uilinde Jumuiya Afrika Mashariki, tuwezeshe kuishi kwa amani, tutimize na malengo yetu. Jumuiya yetu sote tuilinde, tuajibike, tuimarike. Umoja wetu ni nguzo yetu, idumu jumuiya yetu.
Good morning, fellow members. It is my great pleasure that I welcome you to the second annual general meeting of Standard Investment Trust Funds. My name is Job Kihumba. I'm a director at Standard Investment Bank, who are the fund managers of these funds. We shall begin with an opening prayer conducted by my colleague, Pauline Moy.
Good morning, investors. Let us bow our heads for a word of prayer. Heavenly Father, we gather on this day with gratitude and reverence as we open the second annual general meeting of the Standard Investment Trust Fund. We thank you for the gift of this moment, for the vision, the stewardship, and the many hands and minds that have come together to make this meeting possible. Lord, we commit into your hands all our investors, those who have entrusted their resources, their plans, their aspirations to us. Bless them with insight, patience, and the assurance that their stewardship is guided by sound judgment and integrity. We pray for the staff and the leadership of Standard Investment Trust Fund. Grant them the wisdom in decision-making, discipline in execution, and a steadfast commitment to transparency, accountability, and excellence. May their efforts continue to bear fruits that uplifts not only the investors, but the broader community at large. We also remember the partners, advisors, regulators, and all stakeholders who have contributed to this journey. Strengthen these relationships, deepen collaboration, and align all efforts towards shared growth and sustainable prosperity. As this AGM proceeds, we ask for your guidance in every decision, every report, and every resolution. May there be clarity of thought, mutual respect, and a shared commitment to what is right and beneficial for all. We dedicate this gathering to you, Lord, trusting your presence will guide us and your wisdom will lead us. In Jesus' holy name we pray. Amen.
Thank you, Pauline, for reading us in a word of prayer. We are joined this morning by directors of Standard Investment Bank and the partners of the company who are here either in person or virtually. May I also take this opportunity to introduce to you these directors and senior management and the professionals that are here with us. On my immediate left, we have Mr. Nahashon Mogai, the Executive Director for Corporate Governance, who also is the Chief Portfolio Manager for the fund. We are also joined by Mr. Nicholas Wagunyo, who is an Executive Director in charge of strategy and operations at Standard Investment Bank. We are also joined at the far end by Mr. Kevin Aricha. Aricha is the CEO of Kingsland Court Trustees, the trustees of the company, of the funds. On my immediate right is CPA Pauline Moy, who is the Executive Director in charge of finance. Next to her is James Jero, the auditors of the fund. Also joining us at this meeting is the meeting secretary, Dan Murage, who is by his a portfolio analyst at Standard Investment Bank. We also have a sign language interpreter, Vaiona Mwenesi, who together with the remaining directors who are on board in attendance virtually. I would like to acknowledge the presence of representatives of the Capital Markets Authority who are attending virtually, and also to thank them for their continued support. The meeting is being held virtually as per the company's articles of association. The meeting has been convened to conduct the business set out in a notice to the meeting. As a board, we recognize and respect and undertake to protect the rights of members whilst facilitating effective exercise of those rights. Accordingly, while convening and conducting this meeting, the board has ensured that the actions of the company ensure equitable treatment of all members. May I at this point say that there are members who are able to register for this meeting, who in total number 8,244, representing the shareholding of approximately 12% registered to participate in this meeting. In this regard, I would want to confirm the presence of quorum and declare the meeting duly convened. I will now invite the secretary to read the notice convening the meeting so that we can formally start. Mr. Murage.
Thank you, Chair. Good morning, ladies and gentlemen. It is my pleasure to present to you the notice and the agenda for the second annual general meeting of the Standard Investment Bank MANSA-X Special Fund. Our dear investors, notice is hereby given that pursuant to Regulation 134 of the Capital Markets Collective Investment Schemes Regulations of 2023, the second annual general meeting of the Standard Investment Bank MANSA-X Special Funds shall be held virtually on Thursday, 30th of April, 2026 from 10 a.m. to conduct the following business. Agenda number 1 shall be the notice and the constitution of the meeting, where we will read the notice convening the meeting and adopt the agenda. Sub-agenda 2 shall be to table the proxies and determine the presence of a quorum. Second agenda shall be the introductions, where we will welcome and introduce the service providers by the fund manager, and we shall have remarks by the managing director of Standard Investment Bank. And the third agenda shall have the presentation of reports, where we will receive and adopt the minutes of the first annual general meeting held on the 16th May of 2025. Second sub-agenda shall be to receive and consider the report by the fund manager. The third sub-agenda shall be to receive and consider and adopt the audited financial statements for the year ended 2025, together with the auditor's report thereon. The next sub-agenda shall be to receive and consider the report by the trustee. The fourth agenda shall be the company updates, where we will receive company updates from the Executive Director of Strategy and Operations. Agenda number 5 shall be questions and comments, where we will respond to questions and comments received from investors on the fund performance and the operations. And agenda number 6 shall be any other business. This is by order of the trustee. Back to you, Chair.
Thank you, Secretary. I now hand it back to you to present the minutes for adoption for the minutes of the first annual general meeting held last year.
Thank you, Chair. Our dear investors, the minutes of the previous meeting were circulated prior to this AGM as part of the AGM documentation. Therefore, we can consider them as read and adopt them for purposes of this meeting. Thank you, Chair.
Thank you. Please note that you can share your questions via the questions tab on the web as provided, USSD *483 *816 # and choose the questions option. Now, we are ready to go to the presentations, and we will start by reading the statement of the founder and managing director of Standard Investment Bank, Mr. Wangunyo, and we will proceed to read this. On behalf of the entire team, I would like to extend a warm welcome to our valued investors. Your continued trust is the foundation of everything that we do, and we remain deeply committed to earning and upholding that trust every day. This annual general meeting is not only a chance to reflect on our performance, but also an opportunity to reaffirm our commitment to transparency, responsible management, and long-term value creation. We understand the importance of your investment, and we remain focused on stewarding it with integrity, diligence, and vision. We look forward to sharing our progress with you and discussing the path ahead. Thank you. Again, this is a message from James Wangunyo, FA, founder and managing director of Standard Investment Bank. Thank you very much. May I now also invite Mr. Nahashon Mungai, who is the Executive Director for Global Markets and also the Fund Manager, to share the Fund Manager's report of MANSA-X Special Funds performance for 2025. Welcome.
Thank you very much, Chairman. My name is Nahashon Mungai. I'm the Executive Director for Global Markets here at Standard Investment Bank. I'm also the Portfolio Manager for the Standard Investment Trust Funds, which is the umbrella trust fund that holds all the MANSA-X funds. It gives me pleasure to present the Fund Manager's report for the year ending 2025. So in 2025, the Standard Investment Trust Funds assets under management grew by 78.44 billion shillings to close the year at 125.4 billion shillings. This represented a 167% growth in the SITF AUM for the year 2025, a number which greatly pleases us, and we really want to thank our investors for believing in us and boosting this AUM number. We had 37,000 new investors who joined the SITF fund to close the year with about 61,000 total clients. So if you look at the SITF numbers at a glance, the MANSA-X Kenya Shilling Fund grew by about 175% to close the year at 107.35 billion. This actually placed us at the second largest the largest special fund in Kenya and the second largest CIS in the country. The dollar fund, the MANSA-X Special Dollar Fund, grew by 121% to close the year at about $117 million. The MANSA-X Sharia Kenya Shilling Fund grew by over 200% to close the year at 2.33 billion shillings. And the dollar Sharia version of it as well grew by almost 50% to close the year at $3.7 million. So just a quick glance at who the stakeholders for the Standard Investment Trust Funds are. The fund manager is Standard Investment Bank. And at this point, I can just make a quick explanation of the structure. So the Standard Investment Trust Fund is the trust fund that holds all the MANSA-X funds on behalf of investors. And it's separate from the Standard Investment Bank, which is actually the investment bank that is a fund manager for the Standard Investment Trust Funds. So we do this to actually protect investors' funds, and investors' funds are not commingled in the balance sheet of the fund manager, who is a Standard Investment Bank. So this is actually the reason why even during an AGM like this, we have our trustee here, who then represents the interests of the investors. Then we have our regulator, who is the Capital Markets Authority. Our trustee, the Kingsland Court Trustees Services Limited. Our custodians for the Standard Investment Trust Funds are I&M Bank Limited. And our auditors, who are actually in their last term, are Chatafy LLP. So the performance for the funds at a quick glance, the MANSA-X Special Fund for the Kenya Shilling returned 20.74% in 2025. This return is a net return, net of fees, which was a higher return compared to about 19.5% the year prior. This performance was driven by a diversified risk-managed approach across global equities, high-quality bonds, and select alternatives. The exact asset classes that we invest in, because we've also been receiving questions from investors before this AGM, the exact assets that we invest in and our portfolio management approach would be very detailed and might take up too much time for an AGM like this. But we also want to inform our investors that every quarter, I particularly do a quarterly review that explains not only what happened in that quarter, but the strategy of the fund and also the outlook for the next quarter. So we do this 4 times a year, and it helps to understand what the assets are and how this return that we give our investors is actually calculated and created as well. The dollar fund delivered a net return of 13.37%. Which is also higher than the previous year, which was 12.5% in 2024. Again, these are net returns. The strategy, again, was very similar to the Kenya Shilling Fund. So a quick overview of the markets. Globally, we saw the U.S. markets were very healthy last year. We saw the S&P 500 actually gain 16% and the NASDAQ 20%. But we still had a very volatile year. Mostly because of 2 particular issues. The first one was technological disruption, where we saw AI being disrupted by DeepSeek. We had DeepSeek from China showing that maybe the Chinese were able to create AI at a cheaper price than the Americans. But this did not last for long, and we saw the market stabilize after that. Then we had the fiscal policy shifts, which really refers to the tariffs. So we saw, at the beginning of the year, we saw Donald Trump come up with new tariffs, and the market started getting concerned about that. But eventually, it became very clear that these tariffs were not set in stone and were actually helping the U.S. to just really get other countries on the table. So because of that, again, markets normalized, and we saw a resumption of a good market. So essentially the volatility that we feared at the beginning of the year actually turned out to be, they did not actually affect the markets as we expected, and the market actually normalized. So moving forward, one of the things that we saw last year was monetary policy remained very dynamic, with the U.S. Federal Reserve implemented 3 consecutive rate cuts last year, but balancing inflationary pressures, again from these tariffs, and also trying to manage a cooling labor market. Outside of the U.S., the European equities recorded gains, driven by more aggressive easing by the ECB and renewed industrial activity from the rearm Europe. So you had European countries actually arming themselves more because of the geopolitical tensions that we have seen globally. We had European countries actually increase their budgets for defense. In fact, some countries increasing as much as 5% of their GDP. So this boosted spending and also boosted the economies of those countries. But we also saw some countries like France did not actually benefit from this because of political upheavals, because we had a lot of riots on the streets in France last year because of pension fund concerns. So France did not quite benefit from this rising tide, so to speak. The UK, however, outperformed its European counterparts due to, again, defensive sector positioning, and also because of what you call old economy sectors like energy and banking, which attracted capital fleeing high valuations from tech-dominant markets. So essentially, we saw a rotation of capital from markets such as the US into the UK last year. Asian markets delivered a strong return, led by South Korea and Taiwan, given their indispensable role in the semiconductor industry. We saw some of our investors asking us whether we invest in Asian markets, and just to answer that, as I continue making the presentation, is that yes, we do. For example, the biggest semiconductor manufacturing company is from South Korea. It's called the it's from Taiwan, called the Taiwan Semiconductor Manufacturing Companies. And so that's one of the companies that we hold. Also, if you look at South Korea, they have Samsung, which again is the second largest one. So yes, we are actually invested in Asia, and we actually saw very strong returns from there. From the fixed income markets, the markets were modest last year because protectionist fiscal policies, essentially again the tariffs, and created sticky inflation and created a need to reassess the interest rate easing cycle. So if you remember last year, we started with the expectation that the Fed was actually going to ease interest rates, but because of the inflationary pressures from the tariffs, again, this required a reassessment. So fixed income markets, of course, typically require a bit of direction in terms of monetary policy, and because of these disruptions, the markets were quite modest. However, the biggest shift was in Japan, which ended its decades-long experiment with ultra-low monetary policy. And last year alone, we saw the Bank of Japan raise rates twice, which drove the Japanese government bond yields to the highest level since 1999. So, 1 minute. Commodities and currencies, which again forms a big part of our investment strategies. Last year, precious metals were actually the highest performing segment. If you look at the surge in gold last year, we saw the highest surge, the strongest performance in gold since 1979, with gold prices surging almost 65% last year alone. But silver did even better, surging almost 150%. It's important to state that silver plays a powerful role in powering the artificial intelligence revolution due to its superior electrical conductivity in data centers, electric vehicles, solar power, and advanced electronics. So silver essentially continues to be one of the asset classes we think will continue to do very well as the market is dominated by AI and the EV revolution as well. Oil prices last year declined due to increased oversupply and moderating global demand, especially in China. Of course, now looking at this in hindsight, it's very interesting that oil prices actually dropped last year, and we'll be also looking at how that behaves this year compared. The US dollar last year had its steepest decline since 2017, reflecting monetary easing, fiscal dysfunction, and political chaos. When we say political chaos, we actually refer to the longest ever government shutdown, which we experienced in 2025. Locally, the Nairobi Stock Exchange, Securities Exchange, NSE, recorded very strong performance in 2025, boosted by improved macroeconomic stability, increased foreign investor participation, and a rebound in the banking sector valuations. We also saw the CBK cut interest rates over 10 times last year. So again, this was a real boost for the Securities Exchange. And we saw that activity was mostly concentrated in the banking and telecommunication sectors. So the country as a whole did very well in terms of the macroeconomic growth last year. We also saw the shilling remain highly supported to actually trade at levels not lower than 130 against the dollar. So the outlook for 2026, and I think when we look at a lot of the questions that we are receiving from our investors, a lot of them center on how our portfolio management is going to be given what is happening globally on a geopolitical angle, especially the war in Iran and its effect on markets. So the global economic outlook for 2026 has shifted, particularly due to the global energy supply constraints due to the US and Israel military operation in Iran. So this has obviously created upward pressure on inflation, which complicates, just like we saw in 2025 with the tariffs and AI disruption, it complicates the monetary policy environment across major economies. However, and I think this is what should really give our investors comfort. Historically, we have noted that markets tend to shrug off geopolitical risks. If you look at how markets even behave, for example, around Russia-Ukraine, we saw we saw very short-term shocks to the market, but again, a stabilization right after. So markets tend and have continued to tend to place more focus on fundamentals, and this seems to be the case right now. For equity investors particularly, and for MANSA-X, a big portion of our fund is actually in equities, especially US equities. Thematic drivers for 2026 are going to be dominated by the continued expansion of AI build-out. By build-out, we mean not just AI as a revolution, but the infrastructure around it. So if you look at the fund MANSA-X, we will continue to invest in companies that build data centers. So we are talking about companies like Caterpillar. We'll be talking about companies that supply even things like air conditioning. Again, this becomes a big thing. Companies that provide energy for these data centers and for data storage companies. Again, that's why we continue to invest in utility companies like nuclear energy companies. So the strategy for us is to really be part of the infrastructure that essentially sells the shovels to the gold miners, if you were to refer to that analogy. And then we will also be very keen to look at corporate earnings. And to be, if you look at corporate earnings, we've had more than a decade of continuously higher corporate earnings, and we don't think that there will be signs of a slowdown in this. So again, we'll be looking for companies with the best corporate earnings and corporate earnings projections. So all these dynamics still suggest a broadening bull market. By broadening, we mean that in fact, for the last, before the geopolitical and upheavals and the rotation from AI and technological companies, the bull run globally was actually led mostly by the Magnificent Seven. And for us, we feel that we're in a healthier bull run now, especially starting from last year, where the bull run is mostly being boosted by almost all the companies on the S&P, not just a few companies on the NASDAQ. So for us, we think this is a much healthier bull run than we have even seen before. So the dominance of the large technology companies we expect will dwindle as we move forward. For emerging markets such as Kenya, of course, the risks now are around the elevated energy prices and how that creates inflationary pressures due to increased import costs, exchange rate pressures, and how the central bank will then respond to this. Of course, last year we saw the central bank cutting interest rates. It will be interesting to see how this year the central bank will then react to these inflationary pressures in order to balance that and also maintain economic growth, especially as we go into the election period. What's our portfolio strategy? Again, as I mentioned, our portfolio strategy, first of all, is always hinged on genuine diversification. By genuine diversification, I mean not only are we in a lot of instruments and stocks, but we also have we also invest in asset classes that are not correlated. Not just in terms of not just in terms of the instrument itself, meaning that we're not just diversified, say, in equities, but we'll also look for uncorrelated assets like, say, metals, commodities, to create a genuinely diversified portfolio. We go a step even further to diversify a portfolio even from a geographical perspective. So the funds that are held, the investments that are held within the MANSA-X funds, again, cut across different markets. And we do that deliberately to create a genuinely diversified fund. And that has been our strategy since the beginning and has continued to work very well for our investors. So this year, the key areas of focus include allocation to real assets and commodities as a hedge against potentially resurgent inflation. So you'll see us allocating. At some point, you probably noticed we had reduced some of the allocation to soft commodities, like agricultural commodities. We expect a resurgence of that this year. For example, holdings in commodities like wheat. Our other area of focus will be selective exposure to sectors benefiting from energy disruption and structural growth themes such as AI and infrastructure. So we will continue to invest in, for example, energy companies. So companies like ExxonMobil, Chevron, Kinder Morgan, companies that essentially benefit from higher energy prices. We'll continue to invest in those. We'll also be in companies like, say, fertilizer companies that benefit from higher oil prices. The reasoning behind this is very similar to how when oil prices or petrol prices in Kenya go up, matatus increase their fares, and then when fuel prices go down, they don't immediately quickly reduce the fares. So globally, it's the same thing. Companies that have to reprice due to higher energy prices, for example, fertilizer companies will raise the price of fertilizers, but this does not quickly drop even if there's a normalization of oil prices. So funds like us are able to then take advantage of that because it means higher earnings for companies that then benefit from that energy sector price volatility. Active risk management becomes something that we continuously place focus on, and this will not change in 2026 so that we can navigate heightened market volatility. The risk management framework within the MANSA-X funds is actually essentially what should always give investors comfort, that we are continuously watching the downside more than anything else, because we believe that if we watch the downside, the upside of the fund tends to take care of itself. So we employ a lot of prudent portfolio management techniques, and we also are very keen on capital preservation so that we can keep the returns that we give to investors as sustainable as possible. So we want to give our investors comfort that we have been able to achieve an average return for the shilling fund in excess of 18% for almost 7 years now. And for the dollar fund in excess of 12.5% for the last 7 years as well. No, for about 5 years, sorry. And we still want to give investors comfort that the reason we're able to do this is really because of our very prudent portfolio management techniques. And it's not because the fund is disproportionately risky that we give a good return. The fund gives a better return purely because it tends to invest in a lot more assets, and because of that, it's able to again extract more value from a global perspective than just being restricted to a few asset classes, which would mean that it would be very difficult to make a return, and if we did, the return would be a lot more volatile. So that's how we are able to give a return that beats the market, and we are also able to make that return sustainable. So that's it for me from on the fund manager's report, and we are looking forward to the question and answer session, and hopefully we can answer a lot of the investors' questions today. Thank you very much, and back to you, Chairman. Thank you.
Thank you very much, Nahashon, for very ably breaking down these complex stories we hear, and I hope, fellow members, you are able to ask questions based on that presentation. We now move on to the next presentation, and this I welcome the Finance Director to share the financial reports. These derive essentially from what is done by the fund manager, because the performance of the financial performance rely heavily on what is done by at the portfolio management end. Welcome.
Thank you, Chair. We'll go straight to the audited financial statements. We'll start with MANSA-X Special Fund, the KES Fund. The first report will be the statement of comprehensive income. The first income type will be the investment income. In 2025, we made 15.6 billion compared to 5.2 billion in 2024. Then the other class is interest income from call deposits held with financial institutions locally. We made 257 million compared to 232 million in 2024. The other class is fair value gain through profit and loss. The fund made 1.2 billion in 2025 compared to 1.027 billion in 2024. Then we have a provision for expected credit losses in 2025 for 203 million compared to a loss of 296 million in 2024. We have other income and loss. In 2025, we had other losses of 107 million compared to other incomes in 2024 of 204 million, giving us a total gross income of 17 billion 199 million compared to 6.3 billion in 2024. The only allowable expense in the MANSA-X special fund, conventional fund, is the operating expense, which is essentially the management fee. We had an expense of 3.5 billion in 2025 compared to 1.2 billion in 2024, giving us a net surplus attributable to clients, or the return that was distributed to clients, at 13.6 billion in 2025 compared to 5.1 billion in 2024. We move on to the second report for the MANSA-X Special Fund, KES, statement of the financial position. We have two classes of assets. The first class is financial assets at fair value through profit and loss. In 2025, that was at 63.7 billion compared to 29.3 billion in 2024. The other class of assets was the financial assets at amortized cost at 43 billion in 2025 compared to 9.7 billion in 2024, giving us total assets of 107 billion in 2025 compared to 39 billion in 2024. We now head on to the liabilities and capital, which is essentially the unit holder balances. In 2025, we closed at a balance of 107 billion compared to 39 billion in 2024. We had other payables that represent withholding tax payable of 237 million in 2025 compared to 34 million in 2024. Due to related parties, which is essentially the management fee payable to the fund manager, 2025 we had 355 million compared to 5.8 million in 2024, giving us total liabilities at 107.7 billion in 2025 compared to 39 billion in 2024. The last report for the MANSA-X Special Fund KES is the unit holder balances report. We began the year 2025 at 39 billion, which was the closing balance for 2024. We had surplus or returns distributed during the year at 13.6 billion and compared to 5.1 billion for 2024. Additions or new investments from our investors during the year was 77.9 billion compared to 23.6 billion in 2024. Redemptions or withdrawals during the year 2025 was at 23.4 billion compared to 9.1 billion in 2024. Withholding taxes on distribution was only in the year 2024 at 34 million. That gave us a closing balance of the AUM at 107 billion compared to 39 billion in 2024. The last fund in the conventional funds is the MANSA-X Special Fund USD. We'll start with the statement of comprehensive income. The first class of income is the investment income, and this fund is essentially in USD. The first class is investment income, giving us $16,795,000 compared to $4.3 million in 2024. Interest income from local banks gave us $363,000 compared to $511,000 in 2024. Fair value loss for 2025 is $180,000 compared to a profit to a fair value gain in 2024 of $44,000. We had a provision for expected credit losses in 2025 at $241,000, giving us a total gross income of $16.7 million compared to $4.8 million in 2024. The allowable expense is the financial services charge or the management fee. In 2025, it was at 4.3 million compared to $1.7 million in 2024. That left us with net surplus attributable to unit holders, or what was distributed to the investors, at $12.3 million in 2025 compared to $3.1 million in 2024. The second report will be the statement of financial position. We also have two classes of assets, which is the financial assets at fair value through profit and loss. In 2025, that was at $67 million compared to $42 million in 2024. The other class is the financial assets at amortized cost. That was $50 million in 2025 compared to $10 million in 2024. Total assets, therefore, at $117 million in 2025 compared to $53 million in 2024. We head to capital and liabilities, unit holder balances for 2025. We closed at $117 million compared to $53 million in 2024. Other payables that represent withholding tax payable was at $186,000 in 2025. Due to related parties, which is the management fee payable to the fund manager, was at $550,000 compared to $39,000 in 2024, giving us total liabilities of $117 million compared to $53 million in 2024. The last report in the MANSA-X Special Fund USD is the unit holder balance. We opened the year in 2025 at $53 million, which was the closing balance in 2024. Additions during the year, which were the new investments that came in during the year, was at $72 million in 2025 compared to $38 million in 2024. Redemptions and withdrawals during the year was at $20 million in 2025 compared to $9 million in 2024. And then we had the distribution of the surplus for the year at $12.3 million in 2025 compared to $3.1 million in 2024, giving us a net closing balance of the unit holder at $117 million in 2025 compared to $53 million in 2024. That brings us to the end of the financial statements. Back to you, Chair.
Thank you so much, Madam Porine, for reading to us so ably those very, very encouraging financial statements. The full set of these financial statements are available for your scrutiny, comment, and even question. You can access them on your portal as well as on the company's website. We now want to move on to the next report, and this is the report of the auditors. That report is important because it validates what has been led to you by the finance director. We have with us CPA James Jero of Shutterfly LLP to share the auditor's report. Welcome.
Thank you. Thank you, Chairman. We are the auditors of the fund, and we have audited the accompanying financial statements of the following unit portfolios of Standard Investment Trust Fund, which is MANSA-X Special Fund, Kenya shillings, and MANSA-X Special Fund, USD. This financial statement each comprise of statement of financial position as at 31st December 2025 and the statement of comprehensive income, changes in equity and cash flows for the period then ended, and notes to the financial statements, which include summary of accounting policies, significant accounting policies. In our opinion, the financial statements give a true and fair view of the financial position of Standard Investment Trust Fund as at 31st December 2025 and of their respective net income and cash flows for the period then ended in accordance with the International Financial Reporting Standards and the requirements of Capital Markets Act, Collective Investment Schemes, Regulation 2023. Report on other legal requirements. We confirm that the financial statements have properly been prepared in accordance with the Capital Markets Authority Collective Investment Regulation 2023, and the Capital Markets Authority Collective Investment Schemes Regulation 2023 also requires that in carrying out our audit, we consider and report to you the following matters. If the auditor is of the opinion that the proper accounting records for the collective investment scheme have not been kept, or that the accounts are not in agreement with these records, if the auditor has not been given all information and explanation which, to the best of his knowledge and belief, are necessary for the purpose of his audit, and if the auditor is of the opinion the information given in the report of the trustees for the period is inconsistent with these accounts, we confirm that there are no matters to report in respect of the foregoing requirements, and no reportable matters were identified during the audit. The audited financial statements have been signed by CPA Njero Mwangi, practicing number 2198, as a signing partner at Chatterfy LLP. Thank you. Back to you, Chair.
We want to thank Mr. Jero for their work as auditors, and also to report that they have served their last term in accordance with governance regulations, good governance regulations. So we take this opportunity to thank Mr. Jero most sincerely for the work they have done for the fund over the last few years, and to look forward to another auditor whom we shall be releasing or informing members in due course. It is now my pleasure to invite the trustee for the fund to take us through their report. And as was said earlier, the trustee is the keeper or the guardian of the funds that the investors put in our hands. So most welcome, Kevin, to lead us your report.
Right. Thank you very much, Bwana Chairman, and all protocols observed. And on behalf of the trustee of the MANSA-X Special Funds, it is my absolute pleasure to be addressing you today and welcome you to the second AGM for the MANSA-X schemes. We sincerely appreciate your presence today, and thank you really for making time to join us and your continued trust, support, and we do hope and believe that you're following us through this session in the most convenient possible manner. As expressed in the trustee report, the full trustee report is held as part of the financial statement, and it was also shared as part of the meeting pack, so I will not necessarily go through every single detail of it, but I'll give very brief highlights of what transacted in the year 2025, and also key to that probably will be the matters for the year 2026. As it is, as part of compliance, the meeting, the AGM today, we are holding it in respect to the capital markets regulations requirements, so that it is aimed to provide investors a view of the fund's performance, governance, operations, compliance space in the year 2020, the prior year, in this case in the year 2025, and of course receive highlights for the year 2026, particularly in the space of investments, as you have already been able to be briefed by the investment team. This meeting, together with the other engagements such as the investor briefing sessions that you attend and that are made available to you, and all other communication tools that are available as a fund, are part of the strategy for the fund in order to increase transparency and show our commitment as far as good governance and regular engagement with investors is concerned. Our key role as a trustee is to ensure we safeguard the assets of the trust, and that means we safeguard the assets of the investors once entrusted with us. We do ensure that we always remain compliant with the applicable regulations, the trust deed and rules, and also the information memorandum that defines the parameters within which our funds are invested, so that at the end of the day, our focus is always to secure your interest as members, in as much as we are looking out for growth and support in growth of our wealth. We are pleased to confirm that in the year 2025 and the year 2026 so far, that we met our responsibility fully, whereby the trust remained compliant with all the requirements of the Capital Markets Authority, Capital Markets Act and regulations, the trust deed obligations, and also the information memorandum, which is a promise from the fund to the investors. We also, as part of our governance structure, we always maintain quite a close view of the operations of the fund. We ensure that, among other things, we meet quarterly with the investment team, so that we can always understand and appreciate how the fund is performing and keep close tabs in terms of the ever-changing investment environment, and also the customer needs and the investors' needs, to try as much as possible to meet the customer needs as well on an ongoing basis, rather than on an annual expectation by law. So we do confirm again that we remain compliant, and as part of our whole governance structure is that we have appointed independent service providers, as were advised earlier, whereby the Standard Investment Bank are the fund manager, and their role is to invest the funds of our investors. Once we receive any funds, and generally the assets that we hold, these investment obligation rests with SIB as the investment manager. The custodian is I&M Bank. A key role that they play is that they hold assets of the fund in the name of the fund, so that, as was earlier advised, as part of the demarcation and the structuring and protection of our assets, is that the assets of SITF are in the name of the trust. They're not in the name of any other provider that you may have come across, so that at all times your benefits and your interest in the fund are protected. So the role of the custodian is to maintain and hold title of all these assets, and they have conducted that in the best manner possible in the year. We also confirm that we do have an independent external auditor who has just submitted their opinion, Chartify LLP, and as advised by the chairperson, and this will be their final submission to us for quite some time, because it is part of the governance expectation and regulatory expectation that within a certain period of time we rotate and have another set of eyes in terms of how we conduct our business as a fund. So next time you see him, it is not because we had any disagreement about submissions or his reporting, but rather an expectation in terms of the governance roles that we intend to play as a trustee and also as a fund. And finally, we do have the regulator, that is Capital Markets Authority, who also keep a close eye to ensure that we meet our obligations as a fund in line with the regulations, in line with the expectations of our investors. And we do appreciate their support in all that they do throughout the year. As was advised, the trust, or rather the fund, is established in the structure of a trust fund. There is a key reason why this is so, but two of them are: one is to protect your assets, to protect the investors' assets, because, again, to reiterate, is that if established as a trust, all assets of the trust are now in the name of the trust and not in the name of any other party. Not the name of the trustee, not in the name of SIB as an investment manager, not in the name of the custodian at all. It is in the name of SITF. And that means that should we have any misfortune in any of the service providers, then your assets as a trust are still safeguarded, and they sit at the hundreds of billions that we have, and they are not commingled in any way with any of the service providers. So that is the protection, number one, that is offered by a trust fund. Number two, it will be to protect your assets as well individually, because this is a trust. Then this forms part of your own savings, but do not form part of your estate. And then should you have any misfortune, then nobody, none of your creditors can come to us in terms of expecting that we pay out your funds to the creditor. So that is a protection, and also protect your rights. As a trust fund, we do not care your value in the fund, whether you have 100,000 shillings and the next person has 20 million shillings, you are all treated equally in terms of the expectation of the fund as well. And finally, it is a very tax-efficient way because once you register as a trust, we were able to register with the KRA, the Commissioner of Domestic Taxes, and we were given the tax exemption status, and then now it means that we give better tax concessions as well. So in respect of my statements as far as our governance expectation go, I would wish to stop at that and move on to the financials and the movement of the funds in the year. Given that it is a standard, it is an umbrella fund, so I'll just speak to the Kenya shilling first and then to the USD fund. Again, we saw a very, very good performance in the year 2025. I believe from the submission, from the report that you've received, I'm sure where you have inquired, the performance for last year was at 20.74. And I stand to be corrected by whoever may dare that this was arguably the best performance that we've had since inception of the fund, despite the challenges that were there globally. And then it shows you the power of having a well-diversified portfolio that then you can leverage on all areas available in terms of the globe and also locally. So we do appreciate the performance on behalf of the investors. We thank the investment team and we wish and ask that they continue the diligent way of investing. Just as a caution or an advice, as you can see on your screen, the investment performance varies, and it varies because of various aspects in terms of the investment environment and not because of anything else. So we want to assure you that as much as we want to achieve the best, we are also looking out that the rate of return will always vary up and down, but will always accommodate the best in possible way in terms of making investment decisions and our oversight of the same. So as far as the fund growth is, we sit now at about 107 billion as at the end of last year, and a very, very bigger value to date, but that will come in the next submission next year as well. But that reflects about 174% growth from what we had in 2024. This, of course, is coupled with a very good investment performance, but we do not take for granted how much more we received in terms of new cash flow, continued investment from you as investors, which showed a lot of confidence in what the trust, the funds are trying to do in the growth and performance so that you can be able to create your wealth. We had about over 33,000 new investors in the Kenya Shilling Fund. Again, that is a testament to the confidence that investors out there and persons out there have in the strategy that is being deployed. So we do not take that for granted. As far as the USD fund is concerned, the USD fund also had a very, very good performing year as well, whereby we had the fund had a very good performance of about 13.37%, up from 12.5 in the year 2024 and also 12.1 in the year 2023. Again, we do not take that for granted. The funds increased significantly. The funds increased significantly by close to 121% in growth. And again, that is also testament to the confidence that you as investors continue to have in the strategy of the fund. We had close to over 6,000 new individuals, and we ask that you continue to spread the word in respect of what you are participating in to also those who are not participating or investing through this fund. Overall, the results, the numbers that you see, numbers, as they say, do not lie. The numbers state that we are doing something right, and the diversification, the strategy that is being deployed, the oversight is helping us so that on our part as trustee and our part of the fund, we are also being able to grow your investments, grow your wealth as was promised all in all. We conclude in our penultimate statement is that these funds were audited as per the requirement of the capital markets regulations. The audited financial statements were made available to you as part of the submission today. The full statements. They were also published in the newspaper sometime in March, but they also still form part of the trustee report, the abbreviated version of the same, form part of the report so that you're able to go through every nook and crack of the numbers, and we are willing to take any questions, any concerns that may come in respect of those numbers. So we are encouraged, honestly, by the great and the good performance of the fund, despite all the challenges that we are all aware of. We invest in the globe that all of us, we get to hear news that is going on, and we do appreciate the performance of the investment team. And we also wish to confirm to you and assure you of our best attention in terms of governance, so that at the end of the day, we are still protecting your interest in as much as we are looking out for a very good return at the end of the day. So with that, I will end my remarks and thank you once again for entrusting us with your investments, and wish to assure you of our best attention as we oversight these funds. Asante sana, and back to you, Chair.
Thank you so much, Kevin, for that report. It is reassuring to investors that all is well and in accordance with the laid down expectations and regulations. Before we come to the close, I want to invite Mr. Nicholas Wangunyu, who is Executive Director in charge of Strategy and Operations. He has some important company updates to give. Mr. Wangunyu, come on board.
Okay, thank you, Chair. Once again, our dear investors, good morning, and thank you for still remaining tuned to our AGM as I give the company updates, and especially in regards to our digital strategy. And especially the fact that our investors have been asking, and we just want to make our clarifications. Last year, many of you rightfully emphasized the importance of having a mobile application to access your MANSA-X investment information more conveniently. We took that feedback seriously, and we want to begin by acknowledging both the validity of that request and the patience you have shown us since then. We are pleased to report that significant progress has been made. The mobile application has been developed and is currently in an advanced testing phase. This includes rigorous internal validation, user experience refinement, and comprehensive security checks. Particularly important, given the sensitive nature of client investment data and the standards we must uphold as a regulated institution. You can agree, investors, that data is key, and we must protect our environment, and we must protect our data. While our initial intention was to introduce the app at this AGM, the board has taken a deliberate decision to defer the launch to a later date. This is not due to the lack of readiness in development, but rather a commitment to ensure that when application is released, it is robust, it is secure, and it delivers a seamless client experience from day one. Just to emphasize to our investors, when we had started the MANSA-X fund in 2018, we took almost a year or 2 years of testing, and robust testing, for us to be able to launch to our investors. This is the steps that we have to use. It's usually a painful step, but for our investors, just be patient, we are almost there. In financial services, especially in an environment governed by strict regulatory and fiduciary obligations, we believe it is better to be measured and precise rather than premature. The final stages we are undertaking now focused on ensuring reliability at scale, data integrity, and full alignment with client expectations. We want to assure you that this remains a priority initiative for SIB. The progress made thus far positions us well for a launch in due course. And when we go live, it will be with a product that reflects the quality, the trust, and performance you associate with Standard Investment Bank. We appreciate your continued engagement and feedback, while it remains instrumental in shaping how we enhance your investment experience. Thank you once again, and over to you, Chair.
Thank you very much for the assurance about the technology that is coming We cannot afford to be left behind by technology. And we believe that it is in good, it's for good reason that it continues to be checked and confirmed because we want it to work well for the benefit of all. Members, as you are all aware, you have already been given an opportunity to ask questions and to seek clarifications in relation to the agenda of the meeting. Having said that, we encourage you to continue sending in your questions using the question tab on your dashboard or by dialing the USSD code *483 *816# and follow the prompts to submit your questions. May I emphasize here that these questions are very useful because they help us to continually improve on how we do things. We shall therefore endeavor to answer as many questions as possible within the available time. Thank you, dear members. But before we proceed to the questions, I suggest that we have a short break so that we can look at other questions and see what we can be able to do. Thank you.
For 30 years, we've been setting the standard in investment banking. We began with a single trading desk. Today, we are the largest investment bank in Kenya, with a seat for those seeking both conventional and Sharia-compliant investment solutions. From the family home to the boardroom, we safeguard your financial dreams and help your business grow. 30 years in, and our flagship product, the MANSA-X Special Fund, now manages over 100 billion Kenya shillings. Join us as we celebrate 30 years of growth, trust, returns, and more. Standard Investment Bank, regulated by the Capital Markets Authority.
My name is Lucy Ndwati. I'm a Senior Relationship Manager at Standard Investment Bank. Investment diversification is an idea that has been in existence for thousands of years, even before the modern financial markets. The first reference is actually in the Bible, in the book of Ecclesiastes. It says, invest in 7 ventures because you do not know what disaster may come upon the land. In modern world, we say do not put your eggs in one basket. What it means is, do not invest all your money in one asset class. Instead of investing in one asset class, you can invest in various asset classes. You can invest in bonds, you can invest in stocks, you can invest in funds, real estate, and so on. This will help you in case one asset is not performing well, then the other may be doing better, which will help you balance your overall performance. A well-diversified portfolio will have different asset classes. It will also have different sectors, and even at some times it will have different geographical markets. So what this helps is, if one area is not performing really well, then the others are able to compensate. So for example, if you look at the MANSA-X fund, it's well diversified in terms of asset classes. It's also diversified in geographical allocation. So if we assume the Kenyan market is probably not doing so well, then we have opportunities in different markets. The goal of diversification is not to chase a highest return from a single asset class, but to have various assets in your portfolio that will help you manage risks. So when one sector or one asset is not doing well, you are able to balance out your returns. For example, the MANSA-X Special Fund captures diversification very well, from asset allocation to different geographical markets, which enables us to spread our risks. And as we do that, we're also able to give our investors a return that is well balanced. Important to seek professional guidance, understand the risks involved. and match the products that you're investing in with your financial goals. Most importantly, avoid making decisions based on short-term market noise. Investing is not about timing the market, but more about time in the market. Investing is not a one-time decision, it's a journey. At Standard Investment Bank, we are happy to help you through that journey. You can get in touch with us at Standard Investment Bank or through any of the contacts below.
My name is Cyrus Kihoro. I run a business, a family business with my wife, a consulting business in human resources. I'm also an investor with MANSA-X, with Standard Investment Bank. How did I come to know about Standard Investment Bank? Basically, I was out of the country and I had some few coins that I was looking at where I could invest them, particularly because by then my children were in primary school and I wanted to have a fund where I could secure their secondary and also university education. And as I was contemplating whether to buy shares, whether to invest in the money market, I went to the internet and I found this product called MANSA-X from Standard Investment Bank. And I sent an email to the contact that was given, and within hours, even though it was on a weekend, I got a response. And I said, wow, I think these ones who even work over the weekend, they are ready for business. And so I got an email reply from Jacqueline, a staff called Jacqueline, who not only replied to my email, but also attached a 2-page document of what MANSA-X is all about. And that is how my journey with MANSA-X started. That was way back in 2022. And so I am a proud MANSA-X client, now heading to my 3rd year as an investor in MANSA-X. I want to again congratulate SIB for the 30 years they have been in service. It tells us that they have not only been able to go through the phases of formation, but now they are on the phases in the phase that we would call the perfection phase. If anybody has any doubts about investing in MANSA-X, then that doubt should be wiped out or eliminated. 30 years in business and still growing strong is no mean achievement. And once again, I want to say hongera to SIB and keep growing, because we know that when our portfolio grows, when we have as many clients as possible, then it gives us great returns. It gives us good returns. It gives us that confidence that our funds are secure. It gives us that confidence that our funds are going to continue making good returns for us. When you want to invest, and particularly to grow your wealth, look at the mid and long term, and you will have secured your future. Remember, as you age, you need to lock in and have some sustainable income. I usually tell people that once you hit 50, it is not about running after plots everywhere, Kamuru, Mala, Juja Farm. It is about how quickly can you be able to liquidate what you have and be able to invest. Because as you age, as you reach retirement, sometimes those plots, you may have tens of them, but you may walk into a hospital for a checkup and they tell you, we don't need to release you, we need to detain you, but you need 200,000. And you may take 6 months looking for somebody to convert that plot into liquid cash for it to help you in your hospital bill. But if you have something that you can quickly liquidate, like MANSA-X, then you know that your future is secured. So as you invest, look at the long term, look at the medium term, but also look at where you are in terms of age bracket. If you are headed to retirement, This is a product for you to invest in, because after every 3 months, it will be bringing you some returns. And then you can enjoy your retirement. You can be touring the world with the returns from MANSA-X, while your principal is still growing in terms of returns. So MANSA-X it is. Please do not struggle to decide what else to invest in, what product to invest in. That is a portfolio that will grow your wealth. That is a portfolio that will give you quarterly returns. That is a portfolio that can actually help you to even budget for the money that you have already invested in. And the beauty with it is that it's easily liquidated. It's something that you can quickly convert. This is a product. Invest in MANSA-X.
At Standard Investment Bank, we offer top-notch investment advisory to enable you to diversify your portfolio in the global market. To get a committed and a dedicated financial advisor to walk with you through your wealth creation journey, visit our website at www.sib.co.ke or call us on 0777 333 000.
Thank you for submitting your questions. Our panelists will address some of them. The rest will be answered through the text message that you will receive. We have also set up a frequently asked questions section on the website, which tries as much as possible to address the questions, because there are very many questions, and obviously within the timelines that we have, we cannot be able to answer all of them. What we have tried is to group, because a lot of questions are similar. We have tried to group them. And I now want to start with the area with the biggest set of questions, and this is on the fund management. And I will ask the Executive Director for Global Markets to respond to the first set of questions that relate to fund management.
Thank you, Chairman. So I'll just go through. We received a lot of questions from our investors, and we are very thankful for that engagement. We might not be able to answer all the questions now because we're obviously limited by time. But anything we cannot answer, we can actually send to you on email or through your relationship managers. The first question was a question by one of our clients, Ruth Kathini, asking that what happens if the Kenya shilling weakens significantly, or if there is pressure on government debt? How is my case capital protected, case being the Kenya shilling, and what is the worst drawdown investors should be prepared for? What also she asks, if the Kenyan interest rates come down, what is the realistic expected net return for the Kenya shilling fund in 2026, and what will drive that return? So for our new investors, it's good to, again, emphasize the fact that we try to explain a lot of things in our quarterly updates in terms of what the strategy is. But it's a very good question that Ruth is asking about the relationship between the shilling and its strength or weakness versus what the return is for the Kenya shilling fund. So I want to be very clear that when we're investing in foreign assets, which still form the big bulk of the Kenya shilling fund, we don't particularly go in the market and buy dollars, to make that investment. Because if we did that, we would create something called foreign exchange exposure, which again would then create, the fund would then be sensitive to exchange rate fluctuations. How we invest in foreign assets is through something called a combination of swap contracts and other derivatives, where we then eliminate foreign exchange sensitivity in the portfolio of the fund. So if the Kenya Shilling Fund invests in dollar investments, there is absolutely no foreign exchange sensitivity to the shilling. So even if the shilling depreciates, the Kenya Shilling Fund is still able to make the same return. And in fact, this is one of the other reasons why investing in MANSA-X makes so much sense. Because actually, for any investor who is concerned about the depreciation of the shilling, the MANSA-X Kenya Shilling Fund is also inherently hedged against this potential depreciation. Again, this is why we are constantly saying that MANSA-X is one of the best investments out here. Then there's a question about what happens if interest rates go down. Please note, this would affect money market funds, not a fund like MANSA-X. Money market funds are linked to interest rates, meaning that if interest rates go down, then of course their yield also drops. MANSA-X is not related with interest rates, especially locally in any manner, unless we are talking about the actual active trading of fixed income, which is a whole different narrative. So again, to give you comfort, the way this fund is structured, it's structured as a multi-asset strategy fund. We have seen some funds coming up using that term, but we want to be very clear. When we say multi-asset strategy fund, we mean that the fund invests in using a strategy that is not dependent on any one asset class or any one dynamic. So, for example, we are not constantly dependent on what interest rates do to make a return for investors. And for that reason, even if interest rates come down, the net return for the fund is not affected in any way. She also continues to ask what is the expected net return range for 2026. Now, we've always been very careful to talk about expected returns. First, it's a regulatory thing. It's not allowed to talk about expected returns, because if we do so, we are also then saying we're almost like a guaranteed fund. What we usually tell our investors is to really just look at the historical performance of the fund. The fund has been able to outperform the market for more than 6 years now, having a net return in excess of 18%. And we have seen a more challenging markets, more challenging than even the kind of market we're in right now. For that reason, we remain very confident. But in terms of the questions she asks about what will drive the return we expect will be driven by the issues I had raised earlier, focusing on a prudent portfolio management, focusing on taking advantage of volatility in energy prices, and also focusing on companies that generate realistic and sustainable returns for their companies. Andrew Ndombi asks, what is the outlook of the war in Iran if this stretches throughout most of the year? Beyond this, what is the local market outlook in the coming election year? So as I stated in my fund manager's report, geopolitics tend to be actually ignored by markets, especially outside of energy and commodity markets. If you look at what has been happening in the S&P and in NASDAQ, and also in the European markets, a big focus has actually been on earnings, company earnings, and these have continued to be positive, with companies expect to actually have better earnings this year. So markets are very focused on that. And the other thing that markets are very focused on is the capital expenditure by AI companies. At the beginning of this year, the stated capex for AI companies was $600 billion. That's the largest investment we have ever seen in the AI sector. And none of those companies has shown or has indicated that they might actually reduce this capex. So for that reason, we think that the Iran war, even if it stretches, will not impact the equities market negatively. And in fact, we continue to say, as I mentioned earlier, to experience a broadened bull run. But for the fund, again, opportunities are created. Like I said, last year, oil prices essentially did not move. In fact, they declined ever so slightly. So we think that this year, on top of the advantages we can take off in the equity markets, a prolonged war in Iran gives us more opportunities to take advantage of the dynamics of the energy price sector. But this can be comparable to how we navigated markets like when Russia invaded Ukraine in 2022 and how we reacted to that. And we even had an even more depressed market during COVID. We were still able to navigate that. MANSA-X is designed to actually take advantage of markets that are actually a lot more volatile than the usual markets. There's a question on the mobile app, and that will be answered separately. A few other operational issues. Elizabeth Wainaina, she asked a very straightforward question, just asking where we invest the funds. I hope that an AGM like this has been useful. We keep repeating these things because obviously, as you saw, we gained over 30,000 investors last year. So I know for a lot of our investors who've been with us for a longer period, they know and have been used to us explaining our portfolio management techniques. But for our new investors, I'd like to point you in the direction of global markets reports that we usually share, some of which we share as frequently as every week. We also have the fact sheets that are published every quarter. These fact sheets will give you the top 10 holdings, where these funds are, even geographically, what the returns have been historically, in a very summarized way, and we try to make it very simple for our investors. We also have a much more detailed fund managers report, again, every quarter. And this is a document I really advise our investors to ask their relationship managers to share with them, because it gives you a very, very, very good understanding of our approach to portfolio management. But then on top of that, as I had mentioned earlier, I do a quarterly YouTube video that tries to explain in a very simple way our investment management approach. Catherine Rotich is asking, is the capital for investment safe? What measures have you taken to ensure the capital invested is safe and secure? That's a good question, and I think this is a good question for any investor who's looking to invest in any fund. So our fund uses very robust risk management framework and approach, both automated, but also even in terms of just the operational handling of the portfolio. And I can tell you, a lot of people sometimes wonder whether MANSA-X is a very risky fund, because we get a lot of those people asking us and sometimes categorizing us as almost like a very risky fund that you can make a quick return with MANSA-X and then, go back somewhere else and so on. But what we like to emphasize is that MANSA-X, in terms of risk, it's not disproportionate. I mean, the return of MANSA-X is not disproportionate to the risk. And one of the things we like to emphasize is that the reason why MANSA-X makes an above average return is actually because the underlying assets in MANSA-X are highly diversified. And that's the first point of protection for our investors. The reason why we feel that their capital is protected in a big way is because of how many assets that we hold. The same assets, again, are traded using a long-short trading strategy, meaning that if markets go up, the returns will still be okay. And even if markets drop, we have shorting strategies, again, that actually can benefit from a drop in asset prices. I'll give you a very good example. When Russia invaded Ukraine, we saw oil prices drop to even below zero. And even then, we were still able to make a return, not only for the portfolio, but specifically because of that drop, where we were actually able to short oil prices. This is about 4 years ago. I'm just saying that to demonstrate to our investors why they should not worry about their capital. This is a fund that's very well and professionally managed, with one of the most sophisticated portfolio management approach, I think, anywhere this side of the world. And the returns, again, demonstrate this. If you look at our returns for the last 7 years, you cannot replicate a return that averages almost 18% for 7 years without a very, very disciplined approach to downside risk management. So Catherine Rotich and any other investor who's worried about the safety of their investments, I want to confirm to you that you're really in the right place. Frida Wangeshi is asking, do you hold face-to-face investment advice sessions with your customers on request? Well, essentially, your relationship manager or financial advisor, is actually, it works for you. They actually works for you, and anytime you need face-to-face investment advice, you can reach out to them. And if you're referring to any of the other members of the investment committee, again, we're always happy to meet our investors. Joseph Mithamo is asking, why did the earnings dip in the first quarter? Well, first of all, I'm not so sure what he means by dip, because I think the average quarterly return for this fund has been around 4.5%. So if you look at our return in the first quarter, it was actually 4.74%. So this is actually even above the average of the fund itself. So like we have mentioned over and over, this is a market-determined fund. Returns go up and they go down. So we still believe that the first quarter was a reasonable return. Maybe Joseph is comparing to maybe a much higher quarter, because I think even Q4 2020, if you look at Q4 2024, the return was even lower than 2025, I believe. So again, just remember that markets, we are not at a yield fund where the return is sort of prorated across the year. It's really market determined and goes up and down. Byron Mirodho asks, I will need to understand the projected financial plans and growth metrics that MANSA has to remain competitive in the global volatile market while guaranteeing investors' security. I'm not so sure. I think maybe he means how the portfolio management is done to ensure that any volatility in global markets protects investor security. I think I've touched on that. And I think, like I mentioned, MANSA-X is, in terms of how we approach portfolio management, we are really, I believe, the most sophisticated this side of the world in what and how we handle investors' funds and how we then approach the markets with those funds that are entrusted to us. So investor security is something that our investors can sleep well at night knowing that we make very significant efforts to ensure that their funds are secure. Lucy Akumu is asking, do I stand a better investment outcome through a special fund, dollar versus shillings? That's a very good question. But I like to answer it by saying it's really dependent on everybody's individual dynamic. If your cash flows are largely dollar, it might make sense to invest in dollars. But if your cash flows both in and out are shillings, then it makes more sense to invest in a Kenya shilling fund. If they are both, you have every opportunity. Again, you can invest in a MANSA dollar fund and in a MANSA Kenya shilling fund. Of course, the reason sometimes people ask these questions is by saying, look, the dollar fund returns about 13% and the shilling fund almost 20%. So why should I be in the dollar fund? And the dollar against the shilling never changes, or has not been changing for the last 2 years or so. So we like to remind our investors that don't speculate on currency, rather just look at what makes sense to you. Because when when the currency exchange rate fluctuates, it can happen within a period that's so short you can't really start rebalancing your portfolio quickly enough to take advantage or hedge your risk. So, for example, if you see what happened when the shilling had lost value in 2022 and the shilling depreciated to as high as 160 against the dollar, for some of our investors who were invested in the dollar fund felt that they were very happy, and some even were leaving the Kenya shilling fund into the dollar fund. Then the reverse happened, where the shilling again strengthened from 160 to where we are now, 130. So a lot of investors who were in and out of either fund lost a lot of returns because of exchange rate differences. So we don't recommend that, and we recommend to always remember that there will always be what you call a yield differential in every currency. So the shilling has a yield differential against the dollar of about, strictly speaking, about 7 to 8%. So that is the reason why even the return for the shilling will always tend to be about 7 to 8% higher than the dollar. and it's nothing to do with, at that point, the portfolio. It's just the way it is. So for Lucy Akumo, I'd recommend that you just check what your cash flows are. If they are dollar, stay in the dollar fund. If they are shilling, stay in the shilling fund. If they are either, you can split your investment. Michael Orenda asking if we have investments in euros. Well, just, like every other fund in SIB, we have actually created based on our customer needs. For example, that's how we created the dollar fund. That's how we created the Sharia fund. So if we continue to get more and more requests for the euro fund, we can actually create one. But for Michael Orenda, if it's something that you right now need and it's very important to you, you can always reach out to your RM and we can structure a solution for you. So we use some structured products to essentially eurorize, if so to speak, any investment that you have, so that you can get exposure in the euro if those are the kind of cash flows that you have. So we tailor make some of these solutions for our investors. So please reach out to your RM and we'll create a solution for you. The same Michael Orenda has asked whether we invest in the East, China, Hong Kong, Japan, South Korea. Like I mentioned in the fund manager's report, yes, we do. And I mentioned companies like TSMC and Samsung, chip makers. We also invest in China, actually. In fact, we are in some ETFs with Chinese exposure. We even have exposure to the Indian market as recently as last year. So yes, when we say that MANSA-X is diversified, we actually mean it is diversified, genuinely diversified, even across the globe. So yes, we actually invest in the East. Is my cash net profit subject to tax by the government? I guess that will also be handled separately. Again, this is... Alex Milimo is asking, how is your MMF adapting its investment strategy to navigate changing interest rates while still delivering consistent returns to investors? So Alex Milimo, MANSA-X is not an MMF. And in fact, MANSA-X is actually structured as an answer to the to MMFs and their over-reliance on interest rates. So the kind of concern you have about how changing interest rates will affect the investment strategy, that affects MMFs but does not affect MANSA-X, because MANSA-X invests in so many other asset classes that interest rates do not hold. Interest rates are really just part of the strategy of MANSA-X. So because of the diversification we use, our returns are delinked. They don't have an unhealthy reliance on the volatility of interest rates in any manner. So when you talk about MMFs, please remember that MANSA-X is what you call a special fund that uses an approach of a multi-asset strategy, long-short funds. What opportunities and risks do you foresee in the MMF space over the next 12 to 24 months? Especially in emerging markets like Kenya, and how to cushion the investors? Again, we are not in the MMF space. This is not a money market fund. This is a multi-asset strategy fund. But we do think, obviously, because inflationary pressures means that it becomes more difficult to predict monetary policy. So, for example, last year we saw the CBK cut interest rates more than 10 times. That's for 2025. Moving forward in 2026, because of energy prices-led inflation, this might create a bit of an uncertainty in how the central bank reacts from a monetary policy perspective. For this reason, obviously, MMF returns, they had actually, been going down because of interest rates falling. Now you don't know whether they remain sticky, go back up, and so on. It just becomes a bit more of a jittery period for returns in the money market space. How do you ensure transparency and maintain investor confidence especially during periods of market volatility. So this is a portfolio management thing. We've been doing this for a long time, over 7 years. And most importantly, we have actually been managing these funds especially during the most volatile periods that markets have seen. Outside of the financial crisis, this fund, even at its nascent stage, actually had to deal with COVID. And that's actually one of the toughest periods for fund management globally. And we were still able to navigate it. And even during COVID, I remember we were still able to give our investors a return of 15%. And that was a very difficult period. So our portfolio management approach, we believe, is robust enough to persevere anything the market and the global dynamics and geopolitical volatilities throw at us. Alfred Sami wants to know, a very straightforward question. What should we expect as an interest gain this year? Like I mentioned, that's something we cannot quite predict. We can't really give you a figure for that. But like I said, we still expect the bull run in the equities market to continue. We expect energy prices to be volatile. And for that reason, we still expect that the returns will continue to be aligned with our average to date. So there are a few more questions. I can't go through all of them, but I think all of them center around, most of them I've noticed are just concerned about the safety of your investments, which I've emphasized about our portfolio management approach. I've seen a lot of them are concerned about the political period and the elections coming up next year. In fact, this is a very good time to be invested in MANSA-X. It is exactly for this kind of environment that MANSA-X makes a lot of sense because you are now essentially delinked from localized risk. So if you're an investor in MANSA-X, you can now think of yourself as a global citizen, and a lot of what happens locally doesn't actually affect your portfolio. This is actually one of the best reasons to be invested in this fund. So any other, we have a lot of other questions. We received actually hundreds of questions in front of me here. And what we will do, we will reach out through your RMs and answer a lot of them. On top of this, outside of the AGM, I usually hold also webinars with investors, and very soon we'll be having one where we can deep dive into a lot of these questions and keep you completely updated with how this fund is managed and run. Thank you very much for those who have continued to send questions to us, and we really appreciate that effort. Thank you. Back to you, Chairman.
Thank you, Nahashon, for the good answers that you have given the members. I want to invite the trustee. There are some questions that are targeted to him. There are not many, but a number of them. You have a few minutes to respond to this.
All right, thank you, Chairman. We'll try to respond to some of the questions and also make comments as far as we could. It's rightly, as Nahashon has expressed, that we had a lot of questions prior to this conversation, and also some that keep on coming as we progress. So I'll just respond to a few of them. Samson is inquiring what happens to our investments whenever an investor dies. All right, how do you deal with deceased members' investments? How do you determine an investor is leaving his money to compound or grow compared to the expectation of UFA and subject to succession planning? Now, first I'll tackle the first part. The first part is about treatment of benefits upon the demise of an investor. Now, as it were, the expectation is that in the unlikely, or rather in the unfortunate case of demise of an investor, your assets, your savings, or your investment in the fund are going to be, first of all, frozen once we get to hear of that information. But then they can only be distributed upon determination of the succession process. So the succession process includes either appointing an executor or an administrator of your estate, depending on how you're going to structure your estate, so that once we get that confirmation, we are able now to proceed and disburse or distribute your holdings and investments in the trust as far as we shall be guided within the communication or rather the executor or administrator's position. So as long as the funds remain within MANSA-X, then they continue to earn an investment return, they continue to grow until such a time that they shall be distributed. But as you rightly addressed, there is a concern about the Unclaimed Financial Assets Authority and their expectation as well. So for sure, should we retain these funds for a longer than expected period, then the terms of the Unclaimed Financial Assets Act come in play. So that in the event of your demise, that within 2 years, we have not had any contact with your executor, your administrator, your potential beneficiaries, or next of kin, then we have no otherwise, or rather we do not have any other option but to transfer these funds to the Unclaimed Financial Assets Authority. So one of the key things we'll emphasize to our investors is that ensure that you are allowed within the terms of the fund to amend, to update your next of kin, so that at all points in time we actually have the correct details in place, so that should anything happen, we are able to quickly resolve the matter. But again, that is the concept that goes. I think I saw a question also from Vanessa, whether you can consolidate and have the MANSA-X investment as part of a trust fund that you create through your succession planning. As an aside, one of the best succession planning tools as investors, as individuals, is establishment of a trust. It can be a conversation for another day, but then it is something that is quite vital, a very, very good position to have, and we appreciate Vanessa for that thought. And in that respect, we confirm that yes, indeed, given that this is going to be viewed as a success through the probate process, you are able to assign your investment of the MANSA-X, your investment in MANSA, so that they can form part of your estate to be distributed as part of the trust fund. So yes, it is indeed possible to do that and assign as so. Jayesh Patni had advised that they are not able to join in today, unfortunately, and if it is possible to receive the minutes following the meeting, and I think I saw another comment as well. But yes, we confirm that yes, indeed, the minutes will be shared so that they can form part of your reference material, and also the reports that you've seen today run through the screen will still be made available to you, so that subsequently they also form part of your reference material. Not a question, but a comment, and we appreciate that from Beryl, who is appreciating and saying thanks for a job well done. Special thanks to the research team. I'm sure that would have been skipped anyway, somewhere in between, but it's also good to recognize the support and appreciation from our investors. Thanks for skillfully watching over my money to ensure that it does not suffer loss, but be exceedingly blessed. So thank you very much, Beryl. In as much as it is reference to the investment team, the trustee will also want to be part of the blessings, and we take that in as well. All right. A question also from Christine. Are our funds insured? In the place of deposit-taking banks, customers' funds are insured in case of uncertainty. Does this apply to us? No, it does not. Our funds are not insured. It is not. This position does not apply to us because it's a regulatory position on the part of the CBK, and for a good reason as well. Now, a form of security is, number one, as has been advised, is a lot of diversification, so that we avoid a drop in terms of our value, and also ensure that we give value to our members and avoid, as the investment manager advised, a downside. Number two, all our service providers, in terms of discharge of their mandate, have what we call a professional indemnity cover, so that should they undertake as part of their duties, should they be liable for any loss to the fund, then we as the fund expect to be compensated through that indemnity cover that they, each and every one of them, including us as trustee, we have with our various insurance providers. So that also offers a level of protection to the trust. And finally, the trust, the MANSA is established as a trust fund. So the essence of a trust fund ensures that, unlike maybe the banking sector, where assets of your investments, or rather your savings in a bank, are commingled as part of the balance sheet of a respective bank, assets of the SITF, being a trust fund, are totally separate from all the assets of all the service providers and all stakeholders herein. So that in the unlikely event of any misfortune of anyone, including the trustee again, I'm not pointing a finger at anyone in particular, then your assets still remain in the name of the trust. The 100 billion still retain as so. It is only a matter of reuniting or continuing a service depending on where the challenge was. So yes, we confirm that despite the fact that we are not able to, or rather required to offer insurance on the funds, we have measures through regulation and even through basic governance to ensure that we are protected as members or as our investors. So Vanessa, as well, on your part about naming a trust, it is a very, very good thing even to our investors to consider a trust as part of your estate planning. And then once you do that, please be ready and free to name them as part of your recipient of these funds. And finally, a question from Kofi. Is SIB able to issue debt or credit cards to investors that could be linked to their accounts? We would definitely have loved to do that, but unfortunately we are not able to, because that is not within the purview of SIB or of MANSA. That is within the purview of institutions licensed by CBK, for which we are not. But we, of course, we would have loved to do that. So the short answer there, Kofi, is no, it is not possible to do that. Okay. So I will leave it at that and allow for any other questions that may be directed to the trustee subsequently. So thank you, and back to you, Chair.
And thank you very much, Kevin, for those answers. I want to invite Nicholas to be able to respond to one or two questions that relate to what his area.
Thank you very much, Chair. And I'll speak mostly in regards to the digital strategy that I mentioned earlier, in regards to service and potentially future products from a lot of the questions that our investors have asked. And just to state that I'll read a combination of some of the questions. And this is not because we are taking the feedback seriously. We do. However, just because of purposes of time, I'll be able to try as much as I can to answer some of the questions and to group some questions which I consider that are very similar. Like, for instance, if I start, I see from Jacinta, Wanza, Zakaria, and Rocco Self-Help Group have all asked about the mobile application. And maybe just to give just a description of why we started off in a different route. In 2018, we made a decision to use, when we launched the product, to use a relationship management strategy. And the reasons for that was because we felt that we needed to provide more investor education and to be very close in touch with our investors. This has been very successful, and this has helped us to be able to demystify some of these products, some of the assets, and to give a much better feel over time. However, because of we still continue to listen to our investors, the need for a mobile application came to hand, and we have been in this journey. And just to give a brief expectation of what our investors should be able to have going forward is, once we launch it, investors will be able to open an account from anywhere across the world, should be able to deposit funds, should be able to view their statements, and should be able to withdraw. So I think that is in the line of most of the questions that have been asked, which are quite a number, but we appreciate the concerns that are there. So in regards to some of the service questions, one by Lucy Wangui Dungu, if I add another sum to my contribution, will it take 6 months before I can access it? So we, in regards to the vision of the fund, is to have the initial investments locked in, just a recommended lock-in for the first 6 months. And the reasons why is just to encourage and emphasize that this is an investment account. This shouldn't be viewed as a bank account. It shouldn't be viewed as in the banking aspect. It should be seen as more of an investment, more of a long-term investment to be able to trade. So once we finish the first 6 months, you can be able to withdraw at any point in time, and we usually give a period of about 2 to 3 days for a request of withdrawal. If I can go on to some of the other questions. How many times, this is through Christopher, how many times can I withdraw from money from this account? So ideally, as I mentioned, this is preferably to be an investment account. However, you can send the instructions at any time from as long as you send an email to the client services, they'll be able to execute your withdrawal instructions. What is the minimum current deposit for the new entrants? So this has been a question that has been asked for a long period of time in terms of our minimum, in terms of deposits, and also our top-ups. And we've seen some of these questions, and this one in specifically to Maureen Okoth. So because of it being a special fund, we have regulatorily mandated by the capital markets that our minimum investments are 100,000. And this, and this I have to be very careful because my regulator is watching, is that this is a set standard that the regulator had put up in regards to what they call a sophisticated investor, which is the envisionment of the special fund. However, we are closely always speaking with our regulator to see how we can be able to look at that minimum and see if in future there could be adjustments to it. But in terms of also the top-ups, we also have top-ups for that. But once we include the mobile application, we'll be able to have any amount of top-ups. I see a question in regards to Henry. The product offering you would really make a difference if you had a pension. Could you consider? So this we've also, not only from Henry, but also other investors have asked about this. So we are currently working on pension products. This is considered different from pension because one, this product we are regulated by the Capital Markets Authority, while pension is regulated by the RBA, which is the Retirement Benefit Authority. So for that, we have to be able to, we already have a license under the RBA. We've already applied for certain products, which we will be launching out soon. That will be in regards to pension, which will also mirror some of the attributes that we have in SIB. In regards to initial top-ups by Edward Wangeshi, can I top up my investment along with the way as little as 5,000? Like I mentioned earlier, once we have the integration of the mobile application, we'll be able to do that. This is a question by Donna Kilioba. This is in regards to who are your competitors and what strategy do you have in place to stay on top? So this is a very interesting question from Donna. Just to state that being the first money manager license in 2018 and launching this fund of MANSA-X, being the first of its kind, one of the things that we had to do was, as I mentioned earlier, was deliberately provide investor education. So we continuously do that. The other thing that we also do is remain consistent in terms of, and as you've seen even from my colleague Nahashon, he says when our returns remain consistently, they have been consistent for a period of time. We also listen to our investors. So in regards to feedback, like some of the feedbacks that we are getting, and we finally continue to innovate. So we're always trying to see what best practice and to consider best ways to be able to manage and be able to give a better client experience for our investors. Some of the other questions. This is still in regards to withdrawal. In case I have an emergency, this is by Eunice Manhua. Sorry if I got the name wrong. In case I have an emergency, is it possible to get the money to withdraw within 24 hours? So typically we do our requests are usually between 2 to 3 days. However, if it is a really strong emergency, we can be able to make reservations for that. As long as you keep emphasizing to the client service and to your relationship manager, we should be able to take that into consideration. Just trying to see. There's a question by Maureen Makio. Is MANSA-X a money market fund? And I think Nahashon also had alluded to this. No, it is not a money market fund. However, in regards to strategy, we also considering the needs of our investors as they have requested numerous feedbacks that we should be able to create a money market fund. And so we are in the process of also creating a money market fund, and this should be able to provide and mirror what other money market funds provide in terms of the criteria. So that is a work in progress, and we hope to launch that very well soon and be able to provide that for investors. Just to look at some of the questions. Okay, so there's one also by Susan Kimamo. Possible to incorporate alternative sub-funds like fixed income fund, special fund targeting global fixed income assets, equity fund, that is a special fund targeting global assets, balance fund, special fund targeting global equities and global fixed income assets. It will assist in diversifying from MANSA-X fund. So as Nahashon had alluded earlier, the fund is already diversified. However, for us to create different funds, we first have to look at the criteria of our different investors and the different risk appetites. And from there is when we are able to define and be able to create different products based on that. Like I mentioned earlier, we are in the process of looking at a money market fund. We're also looking at a fixed income fund and also looking at pension funds that will be creating too. And at the same time, also in the Sharia space, they're also not left behind. So whatever we are doing for the conventional, we also pushing the same for the Sharia convention side. The Sharia side. Yes, I think the last one is from Dina Waithaka. Are you planning to launch another investment portfolio in the future, particularly one that offers members opportunity to earn monthly interest? I think I alluded to that. We are working on looking for a money market fund that we are working with that. So once again, I think this is as much questions that I can be able to look at because for purposes of time, we have a team that is looking currently at the questions. We have also increased our call center team that's be able to increase our service provision. We have also increased our other resources to be able to provide a much better seamless service provision for our investors. Thank you once again. Over to you, Chair.
Thank you very much for covering a very big area of interest to members. I would now want to look on my right, and ask the finance director to answer a couple of them before I ask the auditor.
Thank you, Chair. Mine is just to emphasize on what my colleagues have already alluded to, especially Nicholas. On the withdrawals, I see that there's a lot of questions about withdrawals. I'll just add on to what Nike has just explained. There's a question here from Godfrey Ojiabo. On withdrawals, don't you think it is risky calling your officer to process, or how do you handle withdrawal cases? I think it is very important, Godfrey, to note that all withdrawals have to be written. The requests have to come on a written format. Whether you call the officer or not call, it can add to your comfort, but it is important to note that we cannot initiate a withdrawal from an investor account until the request is written from the email that you put in your account opening form. That is very important. But also feel free to reach us on the numbers that are on your screen. It is a switchboard number, and we have a whole call center team that is dedicated to just listen to you and to guide you on how you can go about it. And on how there's another question on how fast can I withdraw my investment from Alexander Wawero. Just to reiterate what Nike mentioned, we work with 3 working days, though we are increasing our resources on both operations and call center to make sure that we can manage that time and try and reduce the waiting period. There was a question I saw on lock-in and how long it will take. If I add another sum of money to my contribution, will it take 6 months before I can access it? That's a question from Lucy Wagoi Dongo. Yes, we encourage you to take at least 6 months to access your return. And the reason we do this is to just encourage you to see the returns that have come into your account. If you put in a million shillings today and within a month you withdraw it, you will not feel the impact of when we say we've made a return of 20% net, you will not feel the impact of that return. So we encourage you to keep the lock-in period as far as you can. Don't be in a hurry to withdraw, because this is a savings. This is a savings that you'll use on a rainy day or in your old age. So invest and be disciplined enough not to keep withdrawing if you can. The lock-in period is not cast on stone. You are free to access your money at any time. So that answers the lock-in period. There was also a question about the same lock-in period. Can I continue saving during the 6-month lock-in period? I'm a new member. That is from Rehab Wamushie. Yes, Rehab, we encourage you to invest as many times as you want, even within the 6-month period. It's only that now every investment will take 6 months for you to have access to it if you need to. But there's no ceiling. There's absolutely no ceiling as to how many times you can top up your account. I also saw a question from it was an ethical investment question. I don't know when I saw it. Safe, yes. Yeah. Salim Saif Kobo, you ask, is MANSA-X guided by any moral or ethical values? The decision to invest in defense equities in order to profit from more informed my decision to divest from the FAD. What steps is MANSA-X taking to ensure that clients who do not agree with investing in such instruments are protected from having their funds used to invest in such instruments without having to divest? I think my colleague Nahashon explained how he took advantage of the defense equities and made some good returns for the investors. But we agree, we understand you, Salim, and that is how we created the Sharia funds. We actually have 2 Sharia funds. One is KS, one is USD, and there's ethical investing in those funds. They would not, the assets are very limited, because they have to look at what is Sharia compliant in terms of what the investors in these funds are looking for. So we encourage you, Sarim, even though you divested, you disinvested from MANSA, the conventional funds, please feel free to onboard into the Sharia funds. I think that's the end of my questions for now.
Thank you, Madam Porine. Sorry, thank you, Madam Porine, for responding so well and quickly. I would now ask our auditor, James, to be able to respond to one or two that relate to his work as an auditor.
Thank you. Thank you, Chair, investors and unit holders. I would like to speak, especially as I speak, I'll look on the matters that relates mainly to tax. And one of the questions that has been asked by Lucy Nungari is my cash net profit subject to tax by the government? The simple question is that unless you are exempt to pay any taxes directly through KRA, all earnings in Kenya are subject to taxes. However, the special tax consideration for this fund is mainly the fact that Standard Investment Trust Fund is tax exempt. So that means the funds are tax exempt. However, all the funds that have been distributed to the unit holders and investors, the tax have already been dealt with. So if you look at the specific extract, especially on the Income Tax Act, it is stated that distribution made to unit holders, who are the investors, are confirmed to be, they are said to be deemed tax paid. So there is no further tax to be paid once you receive your return. But you may consult your tax consultant or tax agent, especially when it comes to declaring the same to KRA. So if I continue on the same, another question that relates to taxation. The question that has come is that, and this is from Helen Kenani. Does SIB MANSA handle withholding tax for investors? Again, it's the same response. What we are saying, the distribution to unit holders, which are your earnings, are confirmed to be tax paid, and as the fund continues to be tax exempt. There is a question by Joyce Mukiria. I would like to know if investors can invest in this fund and how to prove the return has already been taxed, and also how to file the annual returns in the country of living, which is Belgium. The first question is that I don't think there is, from our review of the books, there is no restriction to foreigners investing in the funds. However, I would like to also highlight that when it comes to how you file your annual returns in the country you live, in this case Belgium, we want to just confirm that this is mainly governed by the double taxation agreement. Just want to confirm that if you look at the Treasury website, Kenya has recently signed a double taxation agreement with Belgium last year. However, this is yet to be ratified. That means both countries are still having conversations, especially on all withholding taxes and taxes done in Kenya. So once this is ratified, most of the time you'll find it confirmed in the National Treasury website. Confirmed right now, if you look, it is stated as under negotiation. In this case, currently, all cross-border transactions between Kenya and also now in this case you in Belgium, they are mainly governed by the domestic taxes in the respective country, in this case Belgium. So you may also consult a tax consultant within Belgium. I do believe those are maybe the question for me, and thank you so much. Back to you, Chair.
Thank you very much. We are making good progress, and we are still in time, so I believe that we can answer one or two more. And before I ask the panelists to pick the hottest ones that are hanging, I want to answer and deal with one or two that came that are very interesting. And one of them asked, this is from Bronson Kipsang, how stable is SIB? And I thought I could take that one. SIB is stable. It has been around for that 1 year now since it was created. And it's regulated by Capital Markets Authority. And therefore, we feel that it is very safe. And in that regard, and I would add, there is another question from Joseph Mugambi, who says, comment on the rumor of audit by the regulator. What is the issue? Is the interim report out? How have you resolved the issues identified? Now, in fact, that's a good question. because your admit is a rumor. And a rumor cannot be anything else but a rumor. What happens is that almost on a quarterly basis, the Capital Markets Authority, who is our primary regulator, comes around to confirm that we are doing things that we are expected to do. And we always welcome them, and we give them all the answers to the question they ask. Our books on a daily basis are open to Capital Markets Authority on a daily basis. They are actually connected to us, so they can confirm what we are doing is correct at any given moment in time through their apps. The other thing I can mention here is that every time there is any issue that is uncomfortable to any party, either an investor or the regulator or the trustee, the question is normally resolved as quickly as possible, because we do have a mechanism for dealing with any issues. And the last one I want to mention is about the building, and this is from Cyrus, who asked, "Dear SIB, what is the justification for sinking billions into building a new building in Westlands?" And that's also a very good question. We are not sinking anything. If SIB is investing in a building, as it has been said, it's actually investing. And there are many organizations in this country and elsewhere who actually invest in assets that are considered useful for their use and even for their return. For us at SIB, and the MD earlier on in the year did give a comprehensive answer to that same question, that SIB is now going through a phase of growth, and we are now scattered. We feel our services require to be consolidated in a purpose-made building. So we think that if this is done and completed, because it's still being done, and it will be for the benefit of investors. And in any case, let me allay the fears. This is actually not being built with investors' money. I think that we can say comfortably, because as the trustee was saying, there is a clear link between assets of the fund and the assets of the fund manager. If you take that into consideration, so what we are answering here is SIB as a fund manager, and it's not the funds of the investor that we are using. We are using funds that are accessible to SIB, and they may even recruit borrowing, because we don't have to use all the funds. Right now, when we started, we made it clear that we are going to use our cash flows as SIB, and I'm emphasizing as SIB as a fund manager. But as we go along, we may require to enhance this using borrowed funds, which we shall pay the interest due in good financial management and prudence requirements. I now want to ask whether my panelists have one each, hot one. If you have one hot one, I don't know whether you, Dad, do you have a hot one from your end? Okay. And now I'm starting from this side, going that side. James, do you have a hot one?
No hot one.
Okay. Madam Director, Finance Director, I'm sure Nash has one.
Actually, I don't. I think all of them, they're still. To be, Sanjay Patel is asking about, saying that it would be helpful to understand the composition of returns, specifically a clear breakdown between gross investment profit, fees or charges, and net profit. And actually saying that, is there a reason this level of transparency as other investment banks is not currently included, and are there plans to provide it in future reports? Well, we actually give a breakdown of how the returns are actually created. I mean, we give a breakdown of the returns on a quarterly basis, and the returns that we report to our investors are net of fees or charges. And that's why when I mentioned, for example, that our return in 2025 was 20.74, I made it clear that these are net returns. In terms of the composition of returns, that's a really deep dive into a fund. We would have to then go into each individual asset class and identify each asset class's contribution to the return. But just to answer you, Sanjay Patel, because we are regulated by the Capital Markets Authority, this information is actually filed with the Capital Markets Authority, specifically the composition of returns as asked in your question. So if someone was so inclined, because I would imagine for a lot of people that might be very too detailed essentially, but if someone was so inclined, this is information that they can actually verify with the regulator, or maybe visit our offices and we can help you to understand how the composition of returns actually looks like. So just to answer you, please feel free to visit us anytime and get more information on this. Again, this is also something you can do through your relationship manager. Thank you, Chairman.
Nikkei, do you have?
Thank you, Chair. I don't have any burning question, but just to emphasize that we have received more than 200 questions, and which is a good testament that that you are comfortable with giving us feedback, and we really appreciate that. Some of them will try to answer individually with separate teams, and of course the ones that we take into consideration will try to always make improvements for it. Thank you. Thank you. Over to you, Chair.
Thank you. Kevin?
All right. Thank you, Chair. And not a burning question really, but a burning comment, if I can put it so. Just to assure the investors that as part of our role, first of all, we are independent from all other parties. We're not related in any way by way of shareholding or directorship. So as part of our oversight and governance is that we always try to do our best to remain consistent and aware of the investors' needs. And when you see comments, about 200 or so comments come through from investors, and many more that may come beyond here, we appreciate and will always be responsive to the concerns. For instance, the matter about how much one can invest. So we are going to have a considered look into that, so that subsequently we may want to accommodate as many of us as we can in this journey of wealth creation and investing for our future. Otherwise, thank you very much to the members, and back to you, Chair. Asante.
Thank you so much. Before we bring this meeting to a close, may I also take this opportunity to thank our dear members, the investors in MANSA-X funds, and to assure you that we continue to serve with dedication. The fund manager is fully committed to serve and provide returns within a sound environment of ensuring that there are no other deals that would affect anything that could happen, and we can give you the assurance that that is happening. We are very gratified that over the nearly over 7 years now, things have worked well, and we are trusting God to be able to continue to do as well. On a daily basis, we are concerned that we should do the right thing within the context of the law and the regulations that exist, and even beyond the law and regulations. We are always concerned that we act within an ethical framework, knowing that service to man is service to God. And therefore, we can actually say with no fear of contradictions that we are on the right path. We encourage existing investors to continue investing with us and continue recommending others to be able to get into this train of savings and investment. And with those remarks, I want to bring this meeting to a close, and there being no other business, as we have successfully completed the business on the agenda, I want to thank the members for their distinguished presence and participation in the deliberation, and look forward to seeing you again next year. But let me emphasize, don't please wait for next year. Be ready to join in the webinars, and even calling our call centers, and even leading, and you can even visit us anytime that you feel that you want something. I also acknowledge the support provided by image registrars, and thank you so much, image registrars. You have done a stellar job. And also thank SIB staff for their support in planning this virtual meeting. And with those many remarks, I hereby declare the meeting duly closed. Thank you so much.